Hey everyone, this is the Emini overview for Wednesday, August 28th, 2024. And there are just a couple of things I wanted to talk about today that I found interesting. So, to start off on the daily chart, this is what we have coming into the day. We have this strong rally, but you look to the left, the market's in a trading range, big up, big down, big up, and now we're getting high in the range. We're getting a lot of overlapping bars over the past 5 or 6 days. And this rally was strong. It was good for the bulls. However, it's consecutive buy climaxes, pause, buy climax, pause, all the way up. And if you look over the past 5 or 6 days, the market's been more sideways. So we tried to break out to the upside, failed, break out to the downside, failed, and we're reversing very quickly up and down. So the momentum for the bulls has dried up. So the bulls who are buying momentum all the way up, their premise is no longer valid. They can't buy if they're buying momentum because there's no more momentum. So we have a high 2 above yesterday's bar on the daily chart. It's a good buy signal bar, but the context is bad. Lots of trading range price action, fairly far from the moving average, and high in the trading range. There's probably sellers above yesterday's high, if not above Monday's high. And we could easily test lower and find buyers. We may have to test down here below the August 22nd low. Maybe we test down there, but if we do go down there, I suspect there were buyers below that low. It's a trading range, so traders are buying low and selling high. And then just one more thing. Actually, I'll get to that in a few minutes. So, coming into the day, small gap down, very tight trading range into the close of the prior day. And that basically continued into today. Look how many reversals we had. We tried to rally on 1, reversed, sell off on 2, reversed up, rally on 3, reversed down, sell off on 4, reversed up. Market is reversing every bar up and down. Most of the bars have small bodies and big tails. The range is very small. It's a limit order market. Traders are buying low, selling high with limit orders. Another new low, but 3 pushes down, probably buyers. And then we went outside up, but look at every bar so far has been almost completely below the moving average. And so there's something going for the bears. The bears are able to control the price below the moving average. And whenever there's a trading range, but most of the bars are below the moving average, there's an increased chance that you get the downside breakout. You can see I also have yesterday's high and yesterday's low drawn. Most bars are breakout bars. So most days break out of either the prior day's high or low. At this point, we're closer to the high, so it may be more likely we get above the high than the low. But the bulls have to start doing something. The bulls have not had really anything going for them, although you could argue the same for the bears. 3 attempts down, and they're failing. But look at the bulls. Here's a bull bar, but lots of overlapping bars. This is a bear channel. We're getting lower lows and lower highs. And bar 10 is a rally to the moving average in a bear channel. So more likely sellers above. Then we went outside down. Second leg up on 12, but now it's 2 or 3 pushes up, high in a channel. And every time we've tested the moving average today, we have found sellers, so probably sellers. And then upside down, 13. 13 is a reasonable sell for a swing, but it's not high probability. It's in the middle of a tight trading range. It's a stop order trade in a limit order market. So the risk reward is good, but the probability is not yet high. Bad entry bar, but then follow through another bar later. 15, big enough breakout for a second leg. Follow through 16, we're probably going lower. 15 and 16, big enough breakout. We may have already gone close to a measured move. Here's the opening range. The market is probably going to get there at a minimum. Now at this point, is it more likely we get above yesterday's high or below yesterday's low? Now we've had every bar closing below the moving average, most bars completely below, and now we have a downside breakout which was strong enough for a second leg. We're probably going to yesterday's low before yesterday's high. Always in short on 16, might be always in short 15. 17 inside bull bar, but probably a breakout pullback. Compare the strength of 17 to 15 and 16. It's probably a minor reversal. Traders are selling above that bar, selling the close. And then a good bar for the bears, 18, closing on its low. It's a bear trend resumption pattern. It's a low one, short below 18. Good momentum for the bears, good signal bar, probably going lower. And then a decent entry bar for the bears. Big breakout, very little overlap. You can see as soon as bar 18 closed, the market sold off on 19. Now we have a couple of open gaps from the bodies up here to the close of bar 17. And even the tails do not overlap. And then another body gap here. We're testing it, but this is probably another minor reversal. And then 21, another sell climax for the bears. And it could have been a vacuum test of yesterday's low. You can see we got there. Probably going to at least bounce at yesterday's low. Plus it's 3 pushes down. 1, 2, 3. But it's a parabolic wedge. So we know that it's a breakout on a higher time frame chart. If you look at a 15-minute chart, it's really just simply 3 bars down. From bar 13 to 15, that's 1 bar. And then 16 to 18, another bar. 19 to 21, another bar. It's a good bear breakout. It's probably going to get a second leg. But after 3 pushes down, the expectation after a parabolic wedge is a minor reversal, and we could come all the way back up and test maybe the high of bar 21. So that might be a test target. So bears, rather than selling 21, they might wait for a pullback. Maybe we'll test the low of bar 20. It's a bad stop order, sell signal bar. Traders are trapped here. Follow through 22, but the downside is probably limited. Probably going to go more sideways to up fairly soon. And then we start going sideways. Can you buy 24? No, it's a minor reversal. This is too tight. It's very likely it gets a second leg. What about buying 29? Probably not. It's a tight trading range after a strong bear breakout. More likely, this is a bear flag than a major trend reversal. The bulls, maybe they're breaking a trend line, but it's really just going sideways. The bulls, there's lots of overlap. The bulls aren't really breaking out above many bars. It's also better if the bulls can get above the moving average, and they're not doing any of that. Also, look where we're testing yesterday's low. The market broke below yesterday's low, tried to get back above it, failed, tried again, failed, tried again, and it's failing. So support becomes resistance. So probably going to go lower. 31 is a reasonable sell, even though it's a weak signal bar. It might be a low 3, depending on how you look at it. Maybe it's a low 2, but it's a trend resumption setup. 2 legs up after a strong breakout, probably going lower. And then here might be the second leg 1, pullback, leg 2, but big tail below this bar, big tail here, tails on these bars. This might be another parabolic wedge that gets a correction. We're getting far from the moving average. You can see we're vacuuming right back up to it. So what about buying 36 or anywhere in here? I would not. I think it's still minor, but you do have a 4-bar micro channel here for the bulls at this point. But the problem is the overall context. It's still a pretty tight bear channel, and if bulls are buying, they're buying for scalps. So a strong enough micro channel for a second leg. This might be the second leg. We're testing above this trading range where the bulls failed last time, and then big failure 45. So this area was resistance. We got 1 bar above it or 2 bars above it, but they did not close above. And then a big rejection on 45. Bear breakout, you can call it leg 1. trading range through here, new leg 1 breakout, and I'll just keep the blue line drawn. That's yesterday's low once again, and we're expecting that price to be resistance. So probably sellers around this area for a second leg down, and then here might be the second leg 1, pull back, leg 2. Getting strong for the bears, micro channel, bars growing in size, very little overlap, probably sell to close. The problem for the bears, we might be getting close to this channel line, so this might be a sell vacuum testing the channel line, so it can be dangerous to sell here, but nothing to buy, so still reasonable to hold short. 54, the biggest and one of the biggest bars of the day. It looks like only bar 21 was bigger, but in this sell-off it's the biggest and the strongest bear bar, so that might be a sign of exhaustion. It's either a measuring gap or an exhaustion gap. We don't know at this point. However, we do know, there's a couple of things we do know. This might be leg 1, complex pullback, leg 2, and also consecutive sell climaxes here, sell climax, sell climax, sell climax. So I'll never forget, I was in the trading room one day, I think this might have been, a couple of years ago. I was listening to Brad, and he said something that stuck with me. There was something similar going on, and it might have been back, it was more like in this area of the day, and he was saying, it's actually a problem, these bars for the bears, 15, 16, 21, 22. These bars are actually problems for the bears, and I couldn't understand why. And in the webinar chat, I asked a question because I didn't understand that. And he proceeded to explain that sell climaxes are a problem for the bears. And I've mentioned that before in other videos where time control is just as important, if not more important, than price control. So it's kind of like bar 45 today. The price moved a fair distance. We moved almost 10 points. It's a 9-point bar, but it's just one bar. So the bears controlled one bar. And when you have consecutive sell climaxes, what that can be is simply bulls stepping aside. Bulls they're setting their limit orders to buy lower. The price has to go lower. The price has to go lower to find traders willing to buy. So this can be due to strong bears selling, but it can also be due to strong bulls stepping aside. And the point I'm getting at is that sell climaxes, they're not controlled selling. Controlled selling this is a better example, but even that isn't exactly what I'm talking about. I know we had a couple of days. That's better. This is more sustained. But there were a couple of days I want to look for to get this point across. That's a decent example on that day, but not the one I'm thinking of. Here it is. Where's the parabolic wedge? In here. You can find it. Sell climax, pause, sell climax, pull back, pause, another one. But it's a lot more bars. So there's a lot of bars, it's time control, and it's a micro channel for many bars. The bears are controlling price and time. And what's the result? A small pullback trend that lasts all day long. That is not what we're getting today. Today we have sell climax, pause, bull bar closing on its high, sell climax, pullback, sell climax, bull bars closing on their highs. So the buying pressure is decent. It's selling, it's bear, consecutive sell climaxes with tails below bars. This is not the strongest bear breakout. It's strong enough that it's a breakout on a higher time frame and it's going to get a second leg, but you don't expect a small pullback trend that lasts all day from selling like this or like this. And so I thought this could be the end of the bear move. Leg 1, pullback, climactic, second leg, and then we start to go more sideways. I wasn't expecting this, but this is what we got. So Actually, let me go back really quick because I meant to talk about this earlier in the video. At this point in the day, we had a triangle. So here's a contracting triangle, lower highs, higher lows, the market's getting squeezed. But what was interesting about that is that the pattern was nested. So contracting triangle here, but also here. We're getting higher lows, lower highs. So it's a big triangle, and then we have a small contracting triangle within the bigger contracting triangle. I just thought that was interesting. But what does that mean? It just means the market's in breakout mode. It's getting squeezed, and the breakout is imminent. So getting back to today. Sell climax, strong enough, it should get a second leg. Bad buy signal bar, 55, but good follow through. Traders are trapped. The high of the bar becomes support, the high of 55. We tested on 60, we're expecting a bounce. When we do bounce, test it again on 64. You can see the market 2 legs down, 1 pullback 2, testing support. It rallied, testing again, now it's a double bottom, and then a strong rally. 65, 66. Strong enough bull breakout for a second leg, but look to the left. The market might be in a trading range. Also, what's interesting here, sell climaxes, and then the market found an area of agreement. Here's a trading range. So the bulls and bears are in agreement. They're both initiating trades. Nobody seems to be in control. We go up for a couple bars, we go down for a couple bars, back and forth. So we get a breakout of that trading range. This trading range is a magnet. So the midpoint of the range acts as a magnet, and it'll probably get retested. And you can see we vacuumed up to that area and beyond. But the problem with buying here, you might be buying high in a trading range. So we went a little higher, but then a deep pullback. The bulls still expecting a second leg. Maybe we reached the 50% pullback, which we did on 69, and then we rallied. But if you're a bull and you bought the close of 67, you're disappointed on 68. So what you can do, you scale in lower, you buy the 50% pullback on 69, but then you probably look to get out at your original entry. We test the buy the close bar 67 on 72, 73, and then we bounce. And we start to go sideways around that area. For stop orders today, I mentioned earlier, you could sell below 13. You could sell below 15 or sell the close 15, sell the close 16. Low 1 short 18, you could sell. 21 you could sell, but you're expecting a pullback after consecutive sell climaxes. I thought 31 was a reasonable sell, but probably use a wide stop, scale in higher. And then hard to sell after that tight channel by the bulls, but you could sell maybe the low 1 after the pullback, the breakout pullback. So breakout 45, pullback, low 1, 50. You could sell below 50 and then sell the close through here. And then surprise on 65, you could buy 65, 66, buy the close, but when you're disappointed, you get it out at break even, and then just a trading range. Really not great for stop orders at the end of the day or through here. And the day type for today was a bear trading range day. Even though the market sold off many points, if I just showed you the highlighted, what I'm going to highlight, the highlighted part of the chart, you would say that's a trading range, tight trading range. It's bullish, they sell. It's bearish, they buy. Up and down, up and down, up and down. No one's really in control. Big sell-off, but then followed by a big rally. So yeah, it was bearish, but for the majority of the day, we were sideways, even up here. Market was very sideways. So you can see, maybe I'll redraw it this way. Trading range, bear breakout, trading range, bear breakout, trading range, bull breakout, and then trading range. So the majority of the day was spent going sideways. And even when it was selling off and rallying, this was within a trading range as well. Where do we go tomorrow? Well, I mentioned earlier in the video, we had this widely closed rally, strong rally, momentum, but now we're going sideways. We may have to test the moving average, but tight trading range, traders are buying low and selling high, so it looks like we might have support again below the 22nd of August. And you can see we did dip below that bar and find buyers today. And you think about this is a bear trend bar on the daily chart, but again, look at the day. There's sell climaxes, lots of trading range price action throughout the entire day. So it's not like it was a small pullback bear trend day. So that leads me to believe if we do go below today's low tomorrow, there will probably be buyers below. But because of the higher time frame context, the buyers may not come in until the moving average on the daily chart. All right, thanks everybody for watching. Hope everyone has a good night.